In this session, we will learn Accounting Standard 16 Borrowing Costs. Standard defines two terms. One is what is borrowing cost and another one is what is qualifying asset. Borrowing costs are costs, interest costs and other costs which are incurred by an enterprise in borrowing funds. Then what is qualifying asset? Qualifying asset is an asset which takes substantial period of time to get it ready for its intended use or for sale, both. If you observe, it is for use or for sale. In that case, then it comes under qualifying asset. Now, standard gave two explanations. One explanation with respect to borrowing costs and another explanation with respect to qualifying asset. What the explanation says is what constitutes borrowing costs. One is interest costs, commitment charges, maybe processing charges, amortization of discounts or premiums for borrowing of funds. See, this particular case comes with respect to, for example, bonds. Sometimes bonds are issued at premium, sometimes bonds are issued at discount. Then even those costs has to be amortized over the period of time. Amortization of ancillary costs. If there are any other ancillary costs associated with respect to borrowing, there may be some consultant fee or any other expenses, then those also forms part of the borrowing costs. And finance costs in respect of asset acquired under finance lease or any other similar arrangements, even that cases, that particular additional finance charges will form part of the borrowing costs. And next important thing is exchange differences arising from foreign currency borrowings to the extent, see here you have to be very careful, to the extent that they are regarded as an adjustment to the interest cost. See, when the funds are borrowed in foreign currency, then to what extent that particular exchange difference has to be taken to borrowing cost and to what extent it has to be taken to the accounting standard 11 accounting for exchange for difference in exchange rates. So this aspect is the major aspect if you see in the standard. So all this cost forms part of the borrowing cost. And coming to what is a qualifying asset. Substantial period of time means 12 months or more. There may be some cases where the period may not be 12 months, but still depending upon the circumstances and situations, even less than 12 months, sometimes that also forms part of the qualifying asset that you have to check with respect to case. And you have to take into consideration the technological and commercial aspects of that particular asset also while taking the period of 12 months or qualifying asset. So these are the main aspects which the Accounting Standard 16 covers, and what you have to disclose is what is the accounting policy the particular enterprise has followed with respect to borrowing costs and what is the amount of borrowing costs that has been debited to profit and loss account or it has been capitalized. These two are the disclosure requirements with respect to this particular standard. See, with short period of time, I am giving you the outer line of the standard. Now, if you read the standard keeping these aspects in mind, you will easily understand. Thank you.